Since January 2020,
Oh, Jesus
used
Christ.
car values have skyrocketed more than 40%, according to the US Bureau of Labor and Statistics. Although, as you can see at the end of the chart, prices are rapidly starting to decline already. So how did all this happen? Three key factors played a role in the explosion of used car prices.
Wasn't your car cheaper too? Yeah, my car is not even remotely near the price point of that car. That's a fucking Lamborghini or a Ferrari, which is understandable. The GTR is a very expensive car. The GTR is a, you know, it's a luxury sports car, okay? That's fine. Like that's a luxury item that's always going to be marked up all the shit, okay? That's fine. Like but having said that, it's Nissan? No, it doesn't matter. The GTR is like it's a supercar. It's the Nissan supercar. Okay, and there's always going to be aficionados, enthusiasts, yada, 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 that will fucking pay for that. Except if you're paying Lamborghini or Ferrari prices for a Nissan, I mean, you deserve to have your money stolen from you, okay? That's psychotic. That's like actually psychotic. GTR was around the average Republican senator got forgiven in PPP loans. When these GTRs came out, they were poor man's supercar, but they were so good the price just skyrocketed over the years. Sad face. Yeah, the GTR was $55K when it first came out in like 2009. Yes, the GTR, much like the Corvette, was, you know, the same deal. It's the average person supercar, but it was built very well. It was very well designed. A lot of car fanboys like it. Kind of like you got the Supras on the one side. You got the GTR, which is at a different level, obviously, than the Supra. But, you know, they saw it as a... They saw it basically as a way to purchase, like, car lovers who don't want to fucking purchase or don't have enough money to purchase a supercar or a very expensive luxury supercar. Would go and get a GTR. It's a great car, okay? From what I understand. What average person is buying a $150K car? Literally, apparently, everyone that works at a fucking dealership. Great question, chatter. Everyone that's purchasing a car, any car at this point, is buying a $150,000 car. Turns out, a lot of people yelled at me, didn't realize that I was buying a fucking car that is basically the same price point as a fucking F-150 Raptor. I'm paying less for my fucking Porsche Taycan 4S than motherfuckers are in Wisconsin for their goddamn lifted, boosted fucking pickup trucks, dude. Which is wild. I'm in Los Angeles buying a fucking expensive vehicle, okay? Like an expensive vehicle. It is an expensive vehicle. And I'm paying less than motherfuckers in Wisconsin are paying for their fucking psychotic F-150 Ford Raptors, dude. What's the towing capacity of a Porsche Taycan? Exactly. Yeah, you got me there. Except you ain't towing anything. You're just driving it from your fucking... You're just driving it from your ugly-ass cookie-cutter box home that you fucking purchased in Wisconsin to your ugly-ass fucking... gray-ass auto dealership that you work at. What are you towing? The only thing you're towing is debt, okay? Just towing capacity, brother. You don't understand it. Great. That's great. Love that.
Over the last couple of years. Egregious loans, stimulus packages, and the infamous global chip shortage. Let's start with the loans. Between 2021 and 2022, used car payments went up 18.3%, averaging almost $500. The average new car payment sits at $730, which is absolutely insane. Looking at Cox Automotive's vehicle affordability chart, we can now see that it takes an average of 42.2 weeks of the average American's income to pay for a car. Whereas just a few years ago, it was only 32 weeks. Quick note, I noticed the majority of you guys watching haven't actually subscribed to the channel yet, so if you've learned something in today's video, click that subscribe button and turn the notification bell on.
I also tow my jet ski that I rack up credit card debt onto the lake once a year. Yep, that's right. That's what you're towing, motherfucker.
Also, big shout out to Lucky Lopez, Graham Stephen, and a couple other YouTubers for making fantastic videos on the car market bubble situation. I've got links to their YouTube channels in the description below. Dealerships have now started making more money selling you a loan for the car than the actual vehicle itself. As crazy as this sounds, car dealerships lobbied at state level for less regulation on loans. So unlike mortgages and student loans that have federal level regulation, auto loans have become like the Wild West. 61% of people are buying cars using dealer financing. The dealer takes your credit application, blasts it out to sometimes upwards of a dozen banks and lenders, and they submit the lowest bids possible to finance the vehicle. Let's say the lowest bid is 4% APR. The dealer can then choose to add as many percentage points as they think they can get away with before presenting the offer to the buyer. So let's say they get a bid for 4%, they submit you an offer at 7%, and they're gonna pocket that 3% difference. Unscrupulous, yes, but here's where things get really crazy. Unlike mortgages that require strict income and employment verifications, sometimes months and months of bank statements, tax returns, so on and so forth, auto loans rarely do. According to Consumer Reports, only 5% of auto loans were checked to see if the consumer could actually afford the car. That's right, that means more than 95% of people walked in, submitted a credit application, and wrote,
Listen, all you need to do now is just create a separate pool to bet on how many of these fucking auto loans are going to default, okay? And then you have 2008 2 electric boogaloo, okay? That's all you need to do next. If it hasn't happened already, I'm sure it has. $1.5 trillion in auto loan debt is psychotic, dude. We're just living through the same cycle over and over again. And I feel like as the contradictions heighten, the boom bust cycle, or the same cycle where, like, you know, bubbles are created and then explode, ultimately are happening at like much shorter time periods. Like by 2050, if we haven't all fucking eviscerated to anthropogenic climate change and its consequences, we will most likely be having this exact same bubble burst cycle. We'll have this like bubble explosion cycle every week. You know how like the news media and the virality cycle or the trend cycle in the media has turned into a 3-day process now? It went from like, 6 months way back in the day when all you had was a fucking radio to like basically 1 month all the way down to like a couple years ago down to like 3 fucking days, because everything is just like you spin, you say whatever the fuck you want to say about it, and then you turn around and move on to the next thing. I feel like that's what's going to happen to our that's what's going to happen in our economic crashes.
Whatever the heck they wanted as their income without it being verified. You could walk in making $50K a year, put $1 million down, and 95% chance they're not gonna check, and you're gonna walk out with a car that you can't afford the payment on. This means auto loans were given out to millions of people who couldn't actually afford the car. To make matters worse, lenders' loan-to-value ratios have gone insane. Typically, it would be no more than 90%. So if you go to buy a $100,000 car, they'll loan you 90 grand, you have to come up with the additional money yourself. But they've been lending out upwards of 150%.
Looking up data, 6.45% growth rate in car debt averaged over 10 years.
Loan to value, which means they'd be willing to cut you a check for 150 grand because the 100 grand car was marked up 45 grand and you need to pay the unscrupulous dealer. Now, this was fine when the market was crazy. In the beginning of 2020, only 0.3% of new cars were sold at above MSRP. Fast forward to today, 82%. How ridiculous is that? So the loan to value helps cover that markup. But what happens when you paid 130% for a car that then crashes in value in the next couple years? You're gonna be massively underwater with your payments. Well, it's already started to happen. As I mentioned, in Washington, D.C., almost 1 in 4 people are more than 30 days behind on their car payments. In the United States wide, 1 in 12 Americans are more than 90 days late on their payments, which means repossession is more than likely. So what else caused this bubble? massive stimulus packages. It all started with the CARES Act, a $2.2 trillion stimulus bill
Thank you for the
that
5
started
subs. Part of what ended up happening is it's not just the fucking stimmies, boys. That's crazy to say that it's just the stimmies. No, the stimmies did create an asset bubble. It's true. Why? Because you didn't have anything else to fucking buy. Because you were stuck at home. That is part of the reason. So you didn't just get $2,000 and all of a sudden you're like, oh, I'm going to buy $100,000 car. No, the stimmies came at a time when people didn't have any additional things to spend money on. So they were like, okay, well, I'm sitting at fucking home. I got money piling up now. Okay. A lot of the debts are also frozen. That's why people started buying crazy shit. That's why the NFT shit popped off. It has nothing to do with the stimulus and absolutely more to do with the reality that people did not have anything to spend their money on, and all of a sudden they had more money to spend. Okay? That's why a lot of people purchased a $5 a month subscription to avoid the top of the hour ad break, for example. At the top of the hour, there's a 60-second ad break, and people were like, oh shit.
Started at the end of March 2020. People got some extra cash, and you can see on the charts
our dill pickle, thank you for the 10 of the subs,
that right after, in April and May, car prices started to skyrocket.
Brother, that's also when the fucking peak COVID lockdowns happened. What the fuck? That is a significantly greater change in people's lives than a $2,000 check. Those checks didn't even come in by April.
Then in March of 2021, we had the American Rescue Plan that dumped another $1.9 trillion into the US economy. And as you
guys are, it's funny because like these dudes are like clearly hyper capitalists, you know what I mean? But also at the same time, it's like they're not recognizing, they're like criticizing capitalism kind of, or an externality. Without realizing that it is caused by capitalism.
You can see on the consumer price index chart, that's the exact time that car prices skyrocketed yet again. Of course, there were also the PPP loans where some small businesses decided that buying a Lamborghini was a smarter decision than actually paying their employees like they were supposed to for COVID relief. Additionally, we had the infamous global chip shortage. The semiconductor industry can't keep up with demand, which delays vehicle production and increases prices for new cars as well as used cars. A lot of this was due to COVID-19 causing labor shortages, but the switch to working from home also drove up the demand for PCs by more than 13% almost immediately. In fact, 2020 and 2021 were also enormous years for smartphones and tablets. Add in the massive demand for CPUs and graphics cards to mine crypto, and you've got yourself a massive supply chain issue. Because auto manufacturers can't produce cars as fast due to the global chip shortage, that means cars are rarer, and the ones that are actually available are going to be more expensive. We know car prices are higher than ever, but how is this actually affecting the everyday American? Well, subprime loan repossessions are up 11% since 2020. And prime loan repossessions, people with great credit, have doubled from 2% to 4%. Right now, 5% of United States car loans are late on their payments, and 50% of them are underwater on their vehicle, meaning they owe more on the car than the car is actually worth. And that's going to be a huge problem when the car market collapses. And while they bought that car with a residual value that was high because the market was super adjusted, then they paid 25 grand for a car that maybe a year from now might be worth 15 grand, and they're going to be severely underwater and likely result in their car being repossessed. The big problem happens when the car market starts to drop and you've already got yourself a terrible loan with a high APR and you've overpaid on the car. As the chip shortage sorts itself out and automobile production starts to rapidly increase, we're going to see the price of cars dramatically decrease. KPMG, for instance, predicts used cars may plummet by 30% in value by the end of 2023. Ally Financial, who happened to finance my McLaren, predicts prices are going to go down by 15 to 20% by the end of 2023. This is both amazing and super scary at the same time. If you're thinking about buying a used car right now, wait 6 months, 8 months, or even a year, and prices will likely be dramatically cheaper than they are right now. The problem is all the people locked into horrendous car loans from 2020 and 2021 as prices start to go down. Let's say they have a change in income where they lose their job. All of a sudden, they're scrambling to sell a car that's now worth way less than what they paid for it, meaning repossession is likely considering most loans are already underwater, and that's at current high prices. Then, when the cars are repossessed, they get sold back onto the used car market, meaning the market's flooded with even more vehicles and the car market crashes again and again. So we've got a new supply of new vehicles coming as the chip shortage sorts itself out. All these people getting their cars repossessed from horrendous loans, those go back onto the market, and now you're gonna have way more cars than there is demand. Hold on tight, the car market is about to get rocky, but the good news is if you are in the market for a new or used car, prices are going to be much lower in the near future. All right, guys.
Yeah, if you're a holder on a vehicle, dude, keep holding, okay? You're about to hold the bag. Just letting you know.